Okay, let me tell you about a prediction that seemed impossible just a few years ago. In 2014, solar panels consumed about 5% of the world's annual silver supply. Analysts saw it as a niche, high-tech use. Fast forward to today, December 2025. That figure has nearly tripled. Solar photovoltaic PV demand is now projected to swallow 14% of all silver mined this year. But here's what keeps Wall Street analysts awake at night. This isn't the peak. This is just the beginning of the steep part of the curve. We are witnessing the birth of a fundamental economic paradox. The global mission to build a green, electrified future is colliding head-on with the ancient, geological reality of silver supply. And right now, the green future is winning. It's consuming silver at a rate that mines simply cannot match, creating a gravitational pull on global reserves so strong that prices are being distorted. This isn't speculation. This isn't manipulation. This is consumptive demand. So, the question everyone is asking, is the solar industry about to consume all the world's silver? And if so, what happens when the vaults are truly empty? To understand why this time is different, you need to forget everything you know about past silver rallies. The 1980 boom was about three brothers from Texas trying to corner the market. The 2011 surge was about inflation fears and speculative frenzy. The 2021 Reddit squeeze was pure social media hype. Each one crashed because they were built on financial air. The 2025 rally is built on something no one can manipulate: the laws of physics and global policy mandates. Silver has the highest electrical conductivity of any metal on the periodic table. There is no equal substitute for it in the most efficient solar cells on the planet, and every single government on Earth has pledged to build millions more of those panels. This creates a mathematical reality. For the fifth consecutive year, the global silver market is in a structural supply deficit. In 2025 alone, the shortfall is projected to be approximately 117 million ounces. The cumulative deficit over the past half-decade is approaching a staggering 800 million ounces. To put that in perspective, that's nearly an entire year's worth of global mine production, simply gone, consumed beyond what was pulled from the ground. But here's the critical twist. In past deficits, the metal came from above-ground stockpiles, vaults in London, Zurich, and Shanghai that had been filled over decades. Those stockpiles are now dangerously depleted. Chinese exchange-tracked silver inventories have fallen to their lowest levels since around 2015. The invisible buffer that smoothed out every previous shortage is vanishing. So where is all this silver going? Let me show you the three forces creating this solar black hole. First, the sheer scale of deployment is unprecedented. The International Energy Agency and other bodies project the world needs to install terawatts of new solar capacity to meet net zero goals. The annual growth rate of global solar installed capacity is expected to reach 17% before 2030. This isn't a linear increase, it's exponential growth. And every gigawatt requires silver. Second, the technology is moving in the wrong direction for silver conservation. The solar industry is in a massive transition from older, less efficient P-type PERC cells to advanced N-type technologies, primarily TOPCon and heterojunction HJT. These new cells are more efficient, converting more sunlight into electricity. But there's a brutal catch. They use significantly more silver. TOPCon cells, which are becoming the dominant global technology, can use 50% to 100% more silver per cell than the PERC cells they are replacing. So, at the very moment we need to install record numbers of panels, the panels themselves are getting thirstier for the one metal we're running short of. Third, the supply chain cannot respond. This is the most important point. Approximately 70% of all silver mined globally is a byproduct of digging for other metals, primarily copper, zinc, lead, and gold. Only about 30% comes from primary silver mines. This means the fate of silver supply is tied to the economic fortunes of base metal mining. If copper prices fall and those mines slow down, silver production falls with them, whether the solar industry needs it or not. You cannot just flip a switch and produce more silver. Opening a new primary silver mine is a decade-long, multi-billion-dollar gamble. Now, let's talk numbers. In 2024, the solar industry consumed roughly 197.6 million ounces of silver. That was about 16% of total demand. By 2025, that share is hitting 14% of a larger total demand pool. But the physical tonnage is soaring. One projection states the solar sector will consume over 7,500 tons, about 241 million ounces, of silver in 2025 alone. That's more than double the consumption from just 3 years ago. This is where the black hole analogy becomes terrifyingly accurate. Once silver is pasted onto a silicon wafer and sealed into a solar panel, it is effectively gone from the market for 25 to 30 years. Unlike jewelry or silverware, It is not economically viable to recycle it from old panels at scale. The silver is locked in place, powering our homes, while the market frantically searches for the next ounce. This leads us to the October 2025 panic. When industrial buyers, particularly from the solar sector, went to secure metal for their Q4 production runs, they found the shelves bare. The London market froze. Lease rates, the cost to borrow physical silver for a few days, spiked from a normal 0.25% to over 200% annualized. This was the market screaming in real time. The shortage was no longer a forecast in an analyst report. It was a real-time procurement crisis stopping production lines. But, and this is a massive but, even a fundamentally driven rally like this faces monumental risks. Let me break down the 3 ways this solar-driven boom could still collapse. Risk cash-own, thrifting, and substitution. The solar industry is not a passive victim of prices. At $60 plus per ounce, the incentive to use less silver is enormous. Manufacturers are engaged in progressive thrifting, using advanced printing techniques to lay down thinner, more precise lines of silver paste, sometimes mixing in copper. The long-term goal is full substitution with copper metallization. A Chinese manufacturer, ICO, has already started producing some all-back contact modules using copper instead of silver. If this transition accelerates, it could permanently destroy hundreds of millions of ounces of future demand. Risk #2, demand destruction from a recession. Remember, over 60% of silver demand is now industrial. If the global economy tips into a serious recession, the green transition could stall. Solar projects lose financing, EV sales plummet, government subsidies get cut. In a downturn, cost-cutting becomes existential, forcing even faster thrifting and substitution. The structural deficit story would be overwhelmed by a tidal wave of short-term demand destruction. Risk #3, the supply response. High prices eventually cure high prices. At $64 an ounce, silver mining is wildly profitable. This will incentivize the reopening of shuttered mines and the acceleration of exploration. However, due to the byproduct nature of silver, this response is slow and lumpy. It might take 5 to 7 years for significant new supply to hit the market. But if prices stay elevated long enough, the floodgates will open. So, what should you watch? Here are the key indicators that will tell you if the solar black hole is strengthening or if a correction is coming. 1. Shanghai Futures Exchange, SHFE, inventories. This is ground zero for industrial silver demand. If those stocks keep falling toward zero, the physical squeeze is intensifying. Any sustained rebuild would be a major warning sign. 2. Solar panel production data from China. China produces over 90% of the world's solar panels. Watch the monthly and quarterly installation and production figures. Any slowdown will immediately translate into lower silver demand forecasts. 3. Silver loadings, mark watt. Track industry reports on how many milligrams of silver are being used per watt of panel power. This number is trending down due to thrifting. If the decline accelerates dramatically, the deficit projections could shrink. 4. Copper substitution announcements. Watch for major manufacturers like Longi, Jinko, or Trina announcing commercial-scale production of silver-free or copper-based solar cells. This would be a paradigm shift. 5. Federal Reserve policy. While industrial demand is the main driver, investment demand amplifies moves. Lower interest rates generally support precious metals. The Fed's path will influence the speculative money flowing into silver ETFs, adding volatility to the core trend. Let me leave you with this final thought. The previous silver booms 1,000, 980, 2011, 2021 were all about financial silver. They were battles over paper contracts, driven by sentiment, leverage, and narrative. When the narrative broke, the price collapsed. The 2025 boom is about physical silver. It's about a paste that must be applied to a silicon wafer in a factory in Jiangsu province next Tuesday. It's about a solar panel that needs to be shipped to a project in Texas by the end of the quarter. The solar industry's demand is inelastic in the short term. You can't pause a gigawatt-scale production line because silver is $10 more expensive today. The wolf of physical shortage is real. The solar panel black hole is real. But that doesn't mean you can't get ripped apart by the volatility on the way. Markets can stay irrational longer than you can stay solvent, and even the most justified bull market is punctuated by brutal, double-digit corrections. The laws of supply and demand are finally asserting themselves in the silver market after 45 years of false alarms. This time, the boy isn't crying wolf. The wolf is here, and it's hungry. But it's also surrounded by trappers with new technologies trying to cage it. Your job isn't to just see the wolf, it's to navigate the forest without becoming its next meal.